In this video, we're going to prepare a bank reconciliation, and we're going to do the journal entries that go with that. So if you'll recall, we keep track of our cash all period long, and at the end of the period we have a certain cash balance in our cash ledger. Well, also stuff has been happening at the bank, right? We've written checks, we've made deposits, the bank has given us or taken out interest, they've charged us fees, things like that, checks have bounced. So there's some adjustments to be made between what the bank says its balance is and what our cash ledger says its balance is. And then, because you have this difference, you have to do journal entries to make your cash balance correct on your books. So that's what a bank reconciliation is. We'll just get right into it. So you may recall that to do this you have two sides, right? You have the bank side and the book side. And you're going to start with each side's balance and do your adjustments back and forth till you come up with the correct adjusted balance. So I always start with the bank side when I do these. It's easier because there's just not that much to do on the bank side, and then you come up with the balance and it kind of tells you what you're shooting for on the other side. So let's see, the bank balance. There you go. Oh, that's the book. The bank balance was $97.30. Bank balance $97.30. All right. So that's what we're going to start with. Bank balance 10/31/16, $97.30. Now, next step is always add deposits in transit. All right, so deposits in transit. Now, of course, in real life, you'd have to search through your bank statement to find the deposit in transit, but there you're just going to be told. There you go, deposit in transit, $7,200. So we add that. $97.30 plus $7,200 is $16,930. Then you subtract your outstanding checks. Right, which you would go through your ledger and you'd say, okay, well, I wrote this check, but it hasn't cleared. That's what an outstanding check is. $1,300. Put it in brackets, right, so you know I'm subtracting it. So $16,930 minus $1,300 gives me $15,630. And that is what's called the adjusted bank balance, October 31, 2016. All right, so this is the balance I need to shoot for over here. All right, and then that way I'll know what my actual cash balance is. Okay, so you start on the book side with the book balance. There it is, $6,100. Book balance 10/31/16, $6,100. Now this is where you kind of have to search around. You're either going to add or subtract. So anything the bank added to the bank account, you need to add to the book side. So anything that came in, right, gets added. Anything that came out gets subtracted. So that is bank service charge. That is something that you are going to subtract from the book side. Okay, we already did the book balance. Outstanding checks, we already used those. Automatic EFT taken from. So that we're going to subtract. Check from Luco was returned for non-sufficient funds. Okay, that's something that came out. Right, a non-sufficient fund means somebody gave us a check, we put it in the bank, it bounced, so the bank took it out. So that's going to be a subtract from the bank balance. The bank received an EFT and deposited $14,300 in the account. to pay rent. So that is some money that came in to the bank. So we're going to add that to the book side. Bank balance, okay, we already used that. Bank collected a note and deposited the cash. Not okay. So that's something that went in. So we're going to add that. And we already did the deposits in transit. So that's good. All right. All right. So we're going to do the adds first. So book balance, and then we're going to add. What did we have? Well, we have pay the rent. So that's add rent revenue. 14,300. All right, so we did that. And we also are going to add this 1,500 cash. 1,450 is from a note receivable, and 50 is interest revenue. So we're going to call that note receivable 1450, and interest revenue. I suppose it could be interest receivable too, depends on if you already put it on the books, but we don't have it on our books, we don't know, so interest revenue is what it's going to be, 50. And so you add those up, and 14.3 plus 14.50 plus 50 is equal to 15,800. So 6,100 plus 15,800 is equal to 21,900. Now we're going to subtract things out. So less utility expense. Utility expense was 2,700. Okay, so that's that. Oh, I forgot that one. Bank service charge is 70. I'm going to call that bank expense 70. Almost skipped that one. And then we had one more somewhere. Oh, there you go, an NSF check. So hopefully in the future we'll receive that. So I'm going to call that an account receivable. 35. What? We're going to call him and say, hey, your check bounced. What's that about? All right. So 2,700 plus 70 plus 3,500 is 6270. Right? Add those up. They equal to 6270. 21,900 minus 6270 equals 15,630. And of course that is the adjusted book balance 10/31/16. Alright, so as you can see, our two balances are 15,630. That's the amount that should actually be on the books. Right? That should be our ledger balance. But our ledger balance is this. 6,100, right? It tells us right here the books are 6,100. So clearly, we've got to fix that. We can't leave that on the books like that. So we're going to do some entries to fix that. Alright, now the thing to remember about these is you're not worried about the bank. You're only worried about your own books. So we're just going to do these transactions. Alright, so the first one is rent revenue. So clearly if it added cash, right, that's cash is my debit, right? Cash debit, and that came from rent revenue, right? And that was 14.3. All right, so that's cool. Next we had this note receivable. We can do that all in one transaction. We got cash of 1,500. We got note receivable 1,450, And we got interest revenue of 50. Alright, so I'm just adjusting my books based on what this stuff is. You could have done cash 1450, note receivable 1450, interest cash 50, interest revenue 50, but I just really was one transaction, so I compounded it. It's fine. Then utilities expense. Okay, so these are less. That means cash is coming out. So the expense is always the debit. So utilities, that's the T, not that. Alright, so L. Expense is $2,700. And of course, they took cash out for that. Bank expense is 70, and they took cash out for that. Alright, and the NSF, account receivable, hopefully we receive it. We're going to call them and ask for it. Account receivable, you might even put the name of the company so you remember. And of course they took out the cash, $3,500, $3,500. Alright, and so there are your adjusting entries. So now your cash balance will be changed to the adjusted one because you did these debits and credits to cash.